But again, with the translation of foreign financial statement. In previous videos, we have discussed or distinguished between the translation method. We have temporal method and current exchange rate method or functional method. We have distinguished between them and how we apply each one of them. Under current exchange rate method, we translate the assets and liability by current exchange rate, revenues and expenses by average exchange rate, equity by historical, and we distinguish discuss how we translate the amount of retained earning. We have to figure out the amount of beginning balance, net income of current period, and we have to figure out the amount of dividends. On the other hand, when we apply temporal method or adopt temporal method, we have to distinguish between monetary and non-monetary items. As we discussed, monetary items will be translated by current exchange rate, non-monetary by historical exchange rate. When we translate the items of revenues and expenses, we translate it by current exchange rate, except the items associated with non-monetary items, we translate it by the exchange rate that we use to translate the asset or liability itself, and equity we translate it by historical exchange rate. Also the same thing, you have to figure out the detail or the component of retained earning to remeasure it. Let us move to see how or what's the circumstances to adopt current or functional method and temporal method. Now, let us see the circumstances of adopting each one of them. Where we are located, for example, here in Palestine, and the functional currency of our or when we prepare financial statement is, for example, Jordanian dinar, and we move to translate the financial statement of affiliated company located in Egypt, for example. Now the question, what's the functional currency of affiliated company should be determined, and what's the currency they use to prepare the financial statement? Is it as a functional currency or not? Now the question is, let us move with this chart. Foreign currency financial statement must be translated to parent currency. The company located in Egypt, their financial statement should be translated to the parent company currency. Here the question, are statements expressed in foreign currency, are the statement expressed in Egyptian pound as foreign currency? Yes. Okay. If not, so we don't need to translate it. If it is, if our functional currency is Jordanian dinar and the statement expressed in domestic currency, so we don't need to translate it. But if the statement expressed in foreign currency, yes, now you have to determine, is the local currency the functional currency? If yes, if they use Egyptian pound as functional currency and the Egyptian pound is the local currency of Egypt, if the answer yes, so in this case we will use current rate method. Simply, company located in Egypt and the domestic currency is Egyptian pound, and they use it because most of the cash flow or sales price or expense says denominated in Egyptian pound and they use it. So in this case, we will use current rate method to translate the financial statement from Egyptian pound to Jordanian dinar. If not, if they don't use Egyptian pound to record the transaction or to prepare the financial statement, in this case we have to determine, did they use Jordanian dinar, the parent company currency? If yes, in this case we need to remeasure the financial statement. It means we will use temporal method. Again, they are located in Egypt and they use the Egyptian pound to record the transaction, and mostly Egyptian pound is the currency we use to sell and pay the expenses. In this case, we will use current rate method to translate the financial statement. If they located in Egypt and they mostly use Egyptian pound to pay or to settle their transaction, but they didn't use it to prepare the financial statement. Instead of that, they used the parent company currency to prepare the financial statement. In this case, we need to remeasure the financial statement. It means we will use temporal method to remeasure the financial statement. This is the first two situations of translating the financial statement. Let us move to third one, this one. Here, we are talking about the same company, affiliated company located in Egypt, and they didn't use Egyptian pound to prepare the financial statement, and they use, for example, US dollar. And the US dollar is not the currency of parent company. Now, we need to translate it to the parent company currency. So first of all, as they use the US dollar instead of Egyptian pound, which we consider it as the functional currency of the affiliated company located in Egypt. So right now you have to remeasure the financial statement from the US dollar to the Egyptian pound. Then we will translate it from Egyptian pound to the Jordanian dinar. For that, first of all, we will convert it from US dollar to Egyptian pound by remeasure it when we apply temporal method. Now, after we remeasured it, we will convert it again from Egyptian pound to the functional currency of parent company, which is Jordanian dinar. So we will use right now current rate method to convert it from Egyptian pound to Jordanian dinar. Okay, these are the circumstances of using the methods of translate: functional currency or current rate method and remeasurement method, which means temporal method. I hope it's clear. Let us move into the coming video to see how we will apply these methods by numerical example. See you there.